stranger around. He kept me up when I was coming down.
Welcome to Looking at the Markets with David Modell. I am looking out for the beginners out there. Sure, I'm also looking out for the intermediate and advanced traders. And this indicator that I'll be talking about today, the Supertrend indicator, it is one of the simplest ones out there, and that's why I really like it for beginners. But if you're more advanced, you can use it as well. You can add it to your toolbox or your arsenal as a trader or investor. You can combine it with other indicators. I'll show you one way to do that today. But I'm going to start really simply. I'm using tradingview.com. I just want to give them credit for their charts here. And they have a lot of indicators at TradingView, and I'll show you how to get the Supertrend indicator. And so this is Apple stock, and these are candlesticks, and I put it on the 3-minute candlestick chart. And so each of these candles represents 3 minutes of price action for Apple stock, okay? And so I just typed Apple into this symbol search box, and then I changed it to 3 minutes. But you could do this with any time frame, 1 minute, 5 minutes, an hour, daily candlesticks. That's fine too if you're maybe a swing trader or long term. So how do you get the Supertrend indicator? You go to indicators and the search box, type in Supertrend, and it comes right up, okay? And so you would just click on that. Pretty simple, right? And then later we're gonna add an EMA to it, and so you just type in EMA and go to moving average exponential, because that's what EMA stands for, but that's for later. Okay, so you type in Supertrend indicator, you put it up there, and I recommend if you're a beginner, just leave it on the standard settings. You don't have to go messing around with the settings too much in the beginning. You can later on if you want to. So at least the standard settings on TradingView. I don't know about other platforms. They might be a little different. So as you can see, there's really not a lot here, okay? You got the candles, okay? And then you have either a green line below the candles or a red line above the candles. And also some shaded space on these, but you don't have to worry about the shaded space too much for today at least. Doesn't mean you can't use it later on. And so notice that at all times, the candles are either above the line and the line's green, or the candles are below the line and the line's red. Okay, it switches back and forth. It's either or. There's no gray area, no in between. No, there's no kinda, sorta, all right? It's very clear cut. And so for beginners, this is really ideal because when you're using things like moving average crossovers, you got two lines on top of each other. Is it crossing? Is it not crossing? It's hard to tell sometimes. And so that's not necessarily helpful to people who are beginners, people who are really just starting out. So this one is very clear cut, and the simplicity really appeals to beginners as well. And so how do you use this type of indicator? Well, the easiest, simplest way to use it is to you go long, or you're a buyer, in other words, whenever the candles are above the line. Okay, and so the line's going to be green, at least on TradingView, it's going to be green. Okay, so the candles are above the line, you're bullish, you're thinking it's in an uptrend, okay, or the Supertrend is the uptrend, right? And so you're looking at the Supertrend line, and notice the candles are above it, so that is an uptrend, and you're long, you're buying, and you're making money, hopefully making money, okay? But then as soon as the price action of the candles starts to get nasty, okay, starts to get bearish, then what happens? Notice that the Supertrend indicator flips very quickly, so you got to watch it, okay? If you're using those 3-minute candles, I like the 3-minute candles for this one, but other time frames can work as well. Notice that it flips quickly, and so you're paying attention, all right? You're not just walking away for a long period of time and then come back, all right? That's not the idea here. You can do that if it's daily candles, all right? But 3 minutes, not so much. So when it flips, then you can sell if you want to, okay? Whatever stock you had, whatever shares you had, you can then sell them, hopefully for a profit, and then just stay out of it, okay? Now, some people will go short. That's a possibility. That's more advanced, though. That's not really for beginners, short selling stocks. It's kind of a risky proposition for beginners to try to do that. And so when the candles are below the Supertrend line, you're just staying out of the trade, just staying out, sitting on your hands, not doing anything, but you're watching, because this could flip at any candle. Really, any minute it could flip right back, and here it flipped uh-oh, it's bullish again. The trend is back up. And so you can buy. And hopefully it goes up, right? Like it did here. And then as soon as you're watching, as soon as it flips back again where the candles are below the super trend line, then you get out, you take your profits if you have them, you sell whatever stock shares you had, and you sit on your hands again and you wait until the super trend indicator tells you that the trend is back to the upside, okay? So basically you're waiting until it flips again, all right? And so you're not in the trade all the time. You get breaks since you're long only. You're not short selling, because we're talking about beginners here, okay? Now, if you're more advanced, yes, it's possible to short or buy put options, whatever your strategy is, okay, whatever your method is, when the candles are below the super trend line, sure. And so you'd be long and then short, then long and then short. But that's more advanced, and short selling can be very risky. So don't do it unless you know exactly what you're doing and you have, a stop loss or some sort of exit strategy. Of course, that's going to save you from extreme risk. All right, so notice that this really worked out well here, okay? During these periods when you would just waste your time, you were out of the trade, okay? There was a lot of time wasted here, but you weren't even in the trade. A lot of time wasted here, and even some problems, some bearish price action, okay? But you were out of the trade. No worries, no problems, okay? So this is a really great way to go. Now, what about if you want to add an EMA? Because I did promise that. Okay, no problem. Right here, just going to add the 200 period exponential moving average. Now, I know this might be a little more intermediate, okay, more advanced. That's fine. But some people want to look at the overall trend. They want to look at a couple of different indicators at the same time. That's cool. So maybe you only want to enter the trade, go long, or be a buyer when the candles are above the super trend line, okay, and also, here's a filter, and the candles are above the 200 period exponential moving average, or EMA, okay? We're still keeping it simple today. We're just doing a little filtering. And so you wouldn't buy down here, you'd be a buyer, or you'd go long around here. You would still do pretty well. And the EMA tells you the overall trend, not just the short-term trend, okay? Because maybe you only want to be a buyer when the long-term trend is to the upside, all right? You don't want to buy in a bear market type of thing necessarily, okay? An overall downtrend, you want to maybe stay away. Even if the super trend indicator tells you that the trend is up, maybe the EMA is telling you that the trend longer term is down, and so you can stay out of it, all right? And then when the candles are below the 200 EMA, you can just stay out of the trade. Don't do anything no matter what the super trend indicator tells you to do, okay? And so that's one way to combine indicators. Just some basic ideas. I cannot guarantee that any of these will work. You want to make your own decisions, do your own due diligence, but this is something you can try with virtual or demo trading where you're not using real money. See if this works for you. Maybe try it without the addition of the EMA 200. See how that works. And then compare it to if you add the EMA 200 line as a filter. See maybe which one works better, but don't use real money for that. You're just testing it out with virtual or demo trading. Okay, so I hope this was helpful to you. I've got lots more videos coming soon for all you traders and investors out there. Thank you so much for watching and listening. I will talk to you again soon.
He was the best stranger